Hi, I'm Curtis Barties and welcome back to my channel. So in investing, there's a lot of strategies you can follow by buying and selling stocks, buying and selling Bitcoin. But in today's video, I'm going to show you one which I think is probably one of the best strategies you can follow for buying and selling any type of asset. So with that said, if you're new to the channel, as always, do me the honor by subscribing and also smashing the like button as Bitcoin is smashing the market at the moment. So let's get right into today's video. So the strategy in today's video is dollar cost averaging. So what is dollar cost averaging? Dollar cost averaging is an investment strategy which the investor divides up the total amount of invested across a
periodic
purchases of a target asset in the effort to reduce the impact of volatility of the overall purchase. The purchases occur regardless of the asset's price, very important, at a regular interval. In effect, the strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities, Bitcoin price of whatever, at the best price. Dollar cost averaging is also known as the constant dollar plan. So to put this in summary, dollar cost averaging is buying an asset across regardless of the price. You're buying it regardless of the price. So you, for example, you purchasing 200 rands of Bitcoin regardless of the price for 4 weeks in a row, for example. This is just an example. I'm going to show you a detailed example in just a few seconds. As you can see, there's more about dollar cost averaging. Yeah, you can read up on that. So let's just do an example of dollar cost averaging, and then we're going to do it on the exchanges. A lot of exchanges do offer you to dollar cost averaging. So dollar cost averaging works both when buying and selling. I'm going to get into the buying now, and I'm going to get into the selling at the end. So here's just an example of dollar cost averaging. Say you purchased about $10 of Bitcoin monthly. Okay, let's say you purchased 10 weekly. And how long you've been doing this? Say you've done it for about 3 years now. And accumulating doing it. And when did you start? You started 3 years ago. So look at this. So your total amount invested is $1,500, and your exit amount would be 10,000. So you gain a percentage increase of 593%. So this is by just putting in $10 every week for 3 years. You would have made 593% profit on your Bitcoin without having to look at all the other strategies like timing the market. You're just doing this. You can sleep peacefully at night knowing you're not timing the market. So that is the power of dollar cost averaging. This is the same principle when you sell. You don't sell all your Bitcoin at once. You dollar cost averaging out of it. The same as you entering it, you're doing the same as you exiting. But we will get into that. So let's just do an example, another example of dollar cost averaging. Say you a little bit more, like $10 isn't a lot. Say you put $50 each month, each week, $50 each week for about 3 years. You start, like, let's say you started 3 years ago during the bear market of 2017. You started from that time. So let's do that, 3 years. Look at this. You invested, your overall amount would have been $7,000. And your exit amount, your final amount would have been $54,000. Say $54,500. So your percentage change would have been $593. So even during the bear market where you were accumulating Bitcoin, your profit would still be up by 593%. A lot. So that's the power of dollar cost averaging. So let's just go into an example on, I'm just going to do the example on how you can do it on Luno. A lot of exchanges do it. do offer the feature by buying Bitcoin over a week without you having to physically buy it. You can just set it up and it will do it automatically for you. So I'm just going to do this on Luno. Obviously you're going to have ZAR funded. So if you fund your account with, for example, I'm just going to do a random amount with 10,000 for example. So you have 10,000 in your Luno account now at the moment. Remember not to buy it all at once, because say you buy the full amount, 10,000 Rand worth of Bitcoin or whatever asset you're buying, and now the asset goes down, for example, the following day with 5%. You just lost 5% on your initial amount, and now you can't buy the dip. So it's always good, like I said, to dollar cost averaging and like over time. So let's just do it. So let's do it on Luno. So you have funded your account with 10,000 Rand, ZAR or dollars, whatever. You go to buy Bitcoin. They're going to ask you how you want to buy. You're going to choose with your ZAR. Obviously you just funded it. Now they're going to ask you once off, daily, weekly or monthly. So this is the dollar cost averaging feature on Luno. So we want to buy, so remember we have 10,000 Rand. So we want to buy daily 100 Rand. So from here on, we're going to buy 100 Rand of Bitcoin every day, regardless of the price. If it goes up or down, we're going to buy 100 Rand. You can change this regardless of how you want to do it, your strategy of how you want to go about doing the dollar cost. We can change this to about 1,000. So we'll buy for the next 10 days, we'll buy 1,000 until we reach our 10,000 Rand worth of Bitcoin. So we'll just put 1,000 for the next weekly, monthly or daily. We want to put daily. So in your place, you'll say next. So you purchase 1,000 Rands of Bitcoin each day for 10 days. So this is dollar cost averaging. So this strategy also works for exiting, selling your Bitcoin. So let's just go about that, selling the Bitcoin. So I'm just going to do an example of, say you have 10,000 Rand worth of Bitcoin and Bitcoin goes up with 10%. Don't sell your entire position, dollar cost out of it also. So you can sell 20% of your Bitcoin and keep the 80%. And if Bitcoin goes up with another 10%, sell, for example, another 20% of your position. Never sell all your Bitcoin, because if you sell all your Bitcoin and Bitcoin goes up another 50%, you don't have any Bitcoin to sell. You made profits, but you could have made more profits by dollar cost averaging out of it, if you get what I'm saying. So that's my opinion on the dollar cost average. Never financial advice, but look into dollar cost averaging. It's a very, very powerful strategy. So this was the video on dollar cost averaging. If you have learned anything or have gained something from this video, make sure to subscribe and leave a comment down below of what your thoughts are on dollar cost averaging. So I'm Curtis Bartis. Until next time, peace out.